What's up, guys? Today we're learning about what is an IFVG and how do I use the IFVG, fair value gap, and how do I know which ones will work. Okay, here's an example of an inverse fair value gap when you go long, and here's an example of an inverse fair value gap when you want to go short. Now, what is an inverse fair value gap? An inverse fair value gap is essentially just a fair value gap that gets ran through the opposite direction, if that makes sense. So let me show you guys an example here. Let's say you are bullish, right? You want to see price go higher. Let's say there's a bearish fair value gap in this area, bearish fair value gap. Then we come up and we inverse it with good momentum and a solid candle. That is an IFVG, and that is what I use to enter my trades. Usually go for just a 1-to-1. Now, how do I know which ones will work? Because there's millions of inverse fair value gaps, right? I'll show you guys in the chart right here. Right here, look at this. Bearish fair value gap, inverse. Now there was a chop, but it worked out. Not a high probability inverse that I would take, but it's there. Now let me show you when it doesn't work out. Right here, you can't just take any inverse. Right here, we chop and then we inverse it. You would enter it here, you would have not stopped that. The reason this didn't work out is because there's no major sell side key level that we swept. There's no higher time frame imbalance. We're overall bearish. This is not clean at all. We just chopped in it and then we went down and then we finally displaced it. We want to see just a full displacement candle right here. This candle, if we inversed down this candle, it would have been way better entry. I here have also an example. This is essentially what you want to look for if you are bullish bias. If you're bullish, you want to mark out your drawn liquidity, and this is what you want to be looking out for. You want to look out for us to rebalance into a higher time frame PD array. So that could be I like using 4 hour, 1 hour, 15 minute, 5 minute. It depends. If it's a 5 minute, you have to go to a lower time frame. It's 15 minute, 1 minute. It just depends. And then I look for the highest. This is very important. The highest time frame fair value gap to get inversed. I don't know if I spelled that right, but highest time frame fair value gap to get inverse. So let's say this is a 1 hour fair value gap, and this is like the 5 minute, right? I'm be checking 1 minute, 2 minute, 3 minute, 5 minute. Okay, 5 minute. This is fair value gap. I'm taking the highest time frame fair value gap to inverse. So basically, I would enter around here. Wherever the candle closes is where I would enter, unless this was near market open. Market open, if the price could go on without you. So I would just enter the second. If the candle looks nice and bullish and it's like high volatility, I would just enter midway here, even if it doesn't close, because then you would miss out on the trade. And I would just target a 1-to-1, but you could target this high, and I would go break even probably at this high. If not, then this high or this high. It really depends on what you want and how you trade. But yeah, it's really important that there's an internal sweep and an external sell side sweep and a higher time frame PD array. This is what makes this a super A plus high win rate setup. This is the A plus setup. This is exactly what you want to see. Us sweep a major sell side level, and then accumulate, and then manipulate, sweep this internal low that we created, and then have a nice momentum higher, inversing the highest time frame for value gap, and that would be my entry. And for a bearish bias, it's exactly the same thing. It's the exact same thing. You want to see major buy side level getting swept, higher time frame PD array, right? So like, let's say, okay, that's horrible. Something like this. This is like a 1 hour for value gap. We come up, we rebalance to this 1 hour for value gap. We have all this low resistance liquidity, all these lows unswept, and then we take that internal high, nice manipulation, boom, drop lower, inverse value, highest time frame for value gap, enter short, and that's your ideal setup. Now, so basically the most important things, I'm gonna list them out right here. Make sure there's a higher time frame for value gap. I think that's the most important part. Higher time for value gap is required, right? Liquidity, also very important. You need a confident, clear bias and drawn liquidity. If your bias is wrong, like for bullish here, this inverse for value gap means nothing. We would just inverse it and then chop back up, right? So we would probably inverse it and then we'll go up higher and we'll get stopped out. So bias and drawn liquidity is very important. Okay, if your bias or draw liquidity is wrong, this inverse for value gap will never work out for you. What else? And that's essentially it. Now I think I'm gonna show you guys. I'm gonna backtest, show you guys some examples of how to spot inverse value gaps and how I use them. And yeah, let's get to it. Alright guys, we're on FX replay. We're gonna be creating a prop firm session. I'm gonna play this as if I'm trying to pass a 50k account using my IFVG strategy. We'll do 2023 May 10 6 2000. Yeah, I don't like the chart, to be honest. I'm gonna restart it. I'm gonna remove all these lines out. Alrighty. Oh, forgot. Okay, so we're in 1 hour. $50 million getting inversed. We're also in that 15-minute gap. Nope, where's that? Market opens in a couple minutes. Market opens. We dump. Take that low. 5-minute gap here. See if we want to inverse it or hold it. Looks like we held it. 2-minute gets inversed. Doesn't look like a bad short. I'm taking this 1R. Yep, I'm risking big here, trying to pass the account in 2 trades. And check yes. Oh, we got 6 low already. That means I'm gonna go break even. Oh, okay, TP smashed. Pretty simple trade. So why take the trade? We've been overall bearish. We just started being bearish, but yeah, like we took these highs, instant reaction, 5-minute gap, held 5-minute gap very not cleanly. Zoom out, still look bearish. It just looked super clean. 2-minute VG gets ran through. Entry. Yep, okay, next day. Got this high here. See what happens. Wait till market open. I don't trade pre-markets because I've lost way too many times doing that. Okay, we're looking pretty bullish now. Let's just see what the market gives us. Actually, this could be bearish. Could be bearish. If we inverse that 3-minute gap here, I would like shorts. Now, I would have entered here, and this would have been my fill. Break even here. I'm still gonna enter. I won't have the best fill ever. It's very bad actually, but I'll still enter here. It'll probably just be break even. Oh, okay, nice. Okay, this would have been my break even. So, and break even there, going for a 1R. Oh, and TP gets it, and we pass. Oh no, we're $1 away from passing the account. Okay, yeah. Let's see, maybe there's a long here we could take. Holy. Okay. So this trade I'm about to take is very bad, but since we literally only need $1, I'm taking this right here. Boom. Just whatever. Do that. Alright, nice. Pass that count in 2 days. It's really that easy. 2 trades, 2 days. Let's do the certificate. FX replay challenge. Okay. I've never seen that before. It's kind of cool. Let's go to the analytics here. Okay, so boom, 3K. 100% win rate. Only three trades. One of them was break even, pretty sure. Oh no, 3 trades because I took 2 and then that last one, yeah. Okay, so I mean that's how you pass your account in 2 days using just IFVGs. just have a bias, confident draw, and take your highest time frame IFVG, and you pass your account in 2 days. And yeah, that's the video. Bye.